my dance, make it hurt.
Good Wednesday, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. Here on Wednesdays, I like to talk about things that I'm seeing regarding commercial real estate. For those who don't know, let me reintroduce myself. My name is Dominic Green. I am a managing partner at Atentico Commercial Real Estate Services here in the Dallas-Fort Worth area. And so, with that insight of being on the ground and in the field, it allows me to look for opportunities and just to reinforce on the things that I'm already seeing and things that I'm researching and having conversations with and learning about to help provide to us as a community opportunity to go out here and own commercial real estate, right? And whatever that sector is, whether it's multifamily, industrial, retail, office, and the sub markets or the sub sectors within those sectors, as I always say, there's opportunity in niches, because that's what I'm looking for. I wanted to on Wednesdays just provide some information on things that I've come across or reinforce an understanding of trends to help us be more educated and prepared, and for whatever market that you're in, to look for those opportunities and work together, come together collaboratively, and pool our resources, pool our knowledge, pool our funds, and go out here and acquire some real estate. Not just in our communities, but in other communities as well, right? So, with all that being said, I wanted to kind of further expound on what I talked about last Wednesday when we were talking about investing in office buildings. Reading some of the latest reports on as far as the CMBS, that's mortgage-backed securities. So a lot of times your larger institutional properties or private equity group sponsored acquisitions of office buildings use the CMBS to finance their deals, right? So with that being said, a lot of what's been described from TREPS, which is an organization that kind of follows all the defaults and stuff like that regarding mortgages and commercial and residential. A good portion of what they're saying that's coming due is already kind of in forbearance. They're estimating anywhere between, let's say, 22 to 28% of those loans that are backed by office buildings were in forbearance, and a lot of the properties involved, properties with a lot of vacancy, some with issues of making the mortgage, because obviously depending on what you bought it, and the scenarios of where the tenants are either leaving or shutting down or closing from going out of business. That's going to affect their cash flow, so it also affects their payments, right? And then also they describe a lot of the loans that are coming due here in the next 24 months, so 2021, 2022, because of some of the properties that maybe had trouble leasing space or potentially will have trouble leasing space that already have vacancies, because with a lot of businesses are holding off on, especially your large companies are holding off on making long-term decisions on how they're going to address their real estate needs. You still have businesses, especially in the smaller to mid-sized range, leasing space. That's always the activity of spaces being leased between 2,000 to 10,000 square feet. There's just high volume transactions that just typically happen there. But for your larger square footages, upwards to 25 to 50,000 square feet, it's been pretty much slowed down to a crawl because a lot of these companies are looking to see what they're going to do. With the enforcement of COVID having on the labor force working from home, they want to see how that's going to shake out as far as design. Do they need as much space as they needed before? How much of the workforce is going to work from home? But they still are planning to have office space, right? They're not saying they're going to 100% work from home. They're still going to have some form of office space, but just how much? So there is an example like up here in Dallas, let's say Fort Worth Frisco area. It's a technology company. I can't remember the exact name. It starts with an L, but anyways, they lease space at a KBS property, and because they had some of their workforce working from home, they decided to downsize. So they were already leasing about 30,000 square feet, and now they're gonna reduce their square footage by 10,000 square feet to about 20,000 square feet. But they're going to do it on a new term deal, new 5-year deal, right? So it just goes to show you, that they still believe in the office. The office is still going to happen, but they're looking to downsize. Now, why do I bring this up for investment purposes? Well, where there's distress, there's opportunity, right? And if you have knowledge, resources, and understanding of the fundamentals, then when these opportunities present themselves, you can pounce on them. So what I will be looking at is, okay, what quality properties, real estate, that are office buildings that, again, what was the purpose beforehand, the whole COVID thing happened? Well, they were companies were leasing office spaces in the places where their workforce wanted to be, areas that were attractive, live, work, and play. How can I get the best talent? How can I be near the best talent? What's in the best interest for my talent and my employees, right? And so we'll locate there, we'll office space there. And then also incorporating that now you got a lot of companies moving their headquarters from different states down to Texas, which presents opportunities, but on a smaller scale, because those type of properties more than likely, initially depending on where you are in your investment career, may be out of reach. But for the smaller properties where you have tech companies still are looking to lease space, especially those that are enterprise software, those that have anything to do with financials, and then obviously marketing companies are expanding their presence, at least in space, presents opportunity, right? So finding the building that maybe it's a single owner that only has one property, because with those guys, typically they won't have the financial capacity to fund the required TI that's required, because what's happening, you still, in order to entice these businesses to lease space, you got to offer some type of TI package, which also concessions. So you're going to give free rent, TI, which is tenant allowance or tenant improvement dollars, so they can improve the space to their liking, to meet the satisfaction of their employees and their customers, right? So a lot of times with these single owners, they won't have the financial capacity to fund the TI, or to be able to offer a decent size amount of free rent, because they're already financially strapped, especially if they had any recent vacancies or continued vacancies. that they had prior to COVID. And now with COVID putting kind of a pause on decision making in some instances, the leases that they do have soon enough, if they can't renew them, will be expiring, right? So that kind of puts them in the hole, and they still got a mortgage to pay. So that presents opportunity if you understand what businesses are looking to expand, and those particular sectors. Understand your local market, and knowing that, hey, the anticipated recovery is maybe 2 to 3 years away. From what you're hearing, what I'm hearing from brokers and large institutional guys and researchers, that it'll be somewhat normalcy as far as getting back in the habit of going back to the office and getting back to work. Gives you the opportunity to raise the additional equity that you need to sustain that, right? In addition to the TI dollars, and be able to, for free rent and things like that, to entice a new tenant to lease space at your particular building. So, I just think it would be a great opportunity to take advantage if you can find a building that works for you. In my opinion, I wouldn't look at anything, in a C-class type situation. Nothing bigger than maybe 5 stories, if that. I look for low to mid-rise, in my opinion, especially if it's something that was built here in the last, 10 years, where they've kind of built it to almost to industrial specs in a sense. So you have large floor plates, large windows, for great lighting, and then it's just a matter of going in and adding the TI dollars in there to fix the space. And then I'm also seeing that because of the flexibility that businesses are wanting, or they're having discussions about in regards to how they're going to treat their office space, they're looking for shorter term leases, right? Flexibility. So, given that information, that allows you, in a sense, to have a lot of flexible and probably more spec built to a smaller scale. Because, like I said, a lot of your transactions, at least up here in this market, happen under 10,000 square feet, right? So spec building out, a couple of suites, 1,500 square feet, 1,800 square feet, up to 3,500 square feet, to where I would probably go larger, and then if need be, if somebody needed a smaller space, I could just subdivide it real quick by just throwing a wall in between, right? But anyways, and then on those particular suites, they're already pretty much move-in ready. You go against your competition, you lease up space real quick, you can do it, get a return here, on a deal, 18, 24 months. And then that puts you in line for the next go around, right? So, I think that given where we are now and where I think we're going to be, I'm a believer that office is not going away. It's going to change, just like everything, right? Retail's changing. It's not going away. People still buying stuff. People still going to places to buy. At one point, online sales was, according to the research, was like 12%. It's jumped up to about 18%. Estimates beforehand was saying at some point in time in the near future, it was going to get to 20-25%. So with that difference, people are still going into places and buying. And if you understand from a retail standpoint, a lot of your small retailers who don't have the infrastructure or the capital to provide the required e-commerce type of transaction experience, where people want stuff within an hour or a day or two, the buy online and pick up model is something that works best for them, especially from a logistics standpoint, and a cost standpoint. So, those little details, of understanding that, hey, understanding the trends, understanding what's happening, I believe gives us the opportunity to, especially for 2021 and going forward, to look for opportunities. Somebody's making money somewhere, and somebody's gonna benefit. Why not us, right? So, I believe there's opportunity in buying an office. I think you do have to do a little bit more due diligence and really just understand, like when I'm looking at buildings, what is the competitive advantage? How can I earn durable cash flow at this particular location over the long period of time? What about this property makes it attractive to the type of businesses that I'm going to target? And how can I create a brand around that? So that was kind of things that I kind of just initially just think in my head, just from my experience of when I'm talking to tenants and we're helping them lease space, we're having these conversations. Why here? Why this? Who's going to be there? Where are they located at? Does this make sense? And then what is the cost, right? So, I think it's an opportunity there. I'm not too sure about everybody's market, but I can tell you here, that's kind of what I'm looking at, to see if there's opportunity. I can put together a group. We can come together, leverage my knowledge, some of my cash, leverage cash of others, and their knowledge and their skill set and expertise, and we all benefit by owning the building where businesses want to be. They want to do business and have their employees, excel at. So, while you're out there this weekend, I know you're going to be celebrating the New Year. Go ahead and, just drive around and just start, looking at different buildings. Just kind of get an idea of what's around, and really just start asking your question why they're there. Research who's coming to your market, why they're moving to your market. Because when you read a lot of the news clippings about, why certain businesses came to the certain locations or came to those markets, you'll start to pick up on a trend of why they keep coming there. And then you just kind of relate that to, hey, a part of your investment criteria and thesis. Hey, if I get this type of office building based on the trend of what businesses are looking for and what their expectation is and what they're expecting the market to do, this could be an opportunity here. And then just start putting your team together, working out the financials, which, at some point in time, I guess I'll have a video about that as well. We'll have a discussion on, doing a performance analysis and doing a sensitivity analysis and discount cash flows and all that jazz, on the math side of investing, which is still simple, but it is part of the repertoire that you or somebody on your team needs to have and have experience in doing. So, guys, I hope that helps. As before, if you guys have any questions, comments, feel free to leave them below. Subscribe, share, reach out, and I believe 2021 could be a real big opportunity for us in commercial real estate, not just office, but in other sectors as well. It's just a matter of us, working together. As I say, you want to go fast, go alone. You want to go far, go together. So that's what I'm about. And until next time, next Wednesday, happy investing. Let's continue to talk commercial real estate investing, black people, and let's make 2021 a great year. Until next time, until next week, let's get it. Happy investing.
These my dollars make it hurt.